Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Pretty interesting times out there. We saw a surprise move from the Reserve Bank of New Zealand last week, cutting interest rates by 0.5%. That takes the OCR down to 1%. Now that really was a major surprise. Most analysts expected a cut in the interest rate, but only by a quarter point. The half point, as maybe be sort of people reading too much into it and sort of viewing that there is obviously much further bad news down the road. In their press statement, the Reserve Bank came out and said, look, this is just precautionary, and what we're just trying to do is just get ahead of the curve. Obviously concerned about a little bit of growth slowing, but also as well about global growth slowing as well. And really just trying to stimulate the economy and get that inflation back into the economy and being proactive rather than reactive. And obviously what that does do, as sort of discussed here many times with falling interest rates, makes cheaper mortgages, and that should underpin the housing market. But just interesting on that, housing sales volumes actually started to increase before this the latest interest rate cut. So it'll just be interesting to see the next sort of couple of months figures, just to see if that does give it a little bit of a further push. But obviously the flip side of, for falling interest rates is savers really sort of struggling on the sort of term deposits that they're likely to be cut. And for investors looking for income out there, it's becoming a little bit tough. And obviously that's what you're seeing, that sort of search for yield, the drive for yield, is why you're seeing some pretty major increases in sort of dividend shares, the power companies, property trusts, etc. If you are looking for income, I say call us on 0800 867 323. We can discuss what options are available. Still got the ongoing China-US trade spat, but potentially the first sort of blink has come there in that sort of staring game. President Trump has announced this morning that he'll be looking at delaying the latest round of tariffs and removing some items from there as well. The reason why apparently is because coming up to the Christmas period, he's worried that some US consumers might be impacted by that. Now again, that's sort of quite interesting because certainly up until now he's been saying that China's been paying for all the tariffs. US consumers aren't paying for them and aren't really being impacted. That's clearly not the case if he's worried about the Christmas spending and maybe the first sort of chink in his armour there. That follows on the back of the stories as well coming out of the US that apparently for the latest round of tariffs, all his advisors were advising him against that. He went against them and still announced it. So maybe they finally managed to sort of get through to him and persuade him that it's not really such a great idea. Obviously, China still has these ongoing issues in Hong Kong as well, and that's starting to impact on the Hong Kong economy, and that could be interesting as well. Certainly if that starts to really take hold and sort of reduce growth, you're now seeing obviously the occupation of the airport, flights being delayed, and that's having a major impact on their growth, their GDP, and their economy. Just interesting in the US, since the Fed cut interest rates, the low volatility stocks have only been down around 0.4%. The high volatility stocks are sort of Amazons, Apples of this world, etc., are down 8.5 since the US cut interest rates from the Fed. So maybe just gives you a little bit of an insight into the way the US market's trading. The sort of hot stocks are hot, but then obviously when things sort of turn around and don't look quite as rosy, there's quite a bit of selling pressure coming out there. Whereas the normal sort of defensive stocks really don't see too much of the selling pressure coming through. A lot of talk as well about negative interest rates. Even in New Zealand, the Reserve Bank has sort of mentioned the possibility of negative interest rates. And it's becoming a little bit of an issue out there. Earlier this week, at one point, around $15 trillion of global debt was in negative interest rates. Obviously, that has some major implications out there for bond funds, and really just the whole sort of interest rate structure as we know it. Oil has recovered a little bit of ground out there, but it's still sort of stuck. Really sort of that sort of 55, 60 range. Potentially a little bit of a spike down. I suppose the big issue there could be if China starts to buy some of the Iranian oil and sort of circumvent the sanctions imposed by the US. Some analysts are saying if that is the case, then potentially oil could go back to sort of $30 a barrel. Still no further news on Brexit. Boris Johnson is still sort of doing the round, saying that come 31st of October, the UK will be out, whether there's a deal or not. Port of Napier IPO, that was heavily oversubscribed. It's just going to be interesting to see how that does sort of play through, because the minimum investment size apparently was 2,500 shares. I say with the heavily oversubscriptions out there, it's just going to be interesting to see how that sort of plays through. Because certainly a lot of investors out there who were looking for shares didn't get them. So just to sum up, I mean, looking at it, the way sort of interest rates are going, central banks talking, and the sort of forecast for interest rates over the next sort of 12 to 18 months, they look as though potentially they're still on the downward path, and that is just going to increase that sort of search for yield. High dividend shares are still going to be pretty well sought after, and it really is just a question of looking for yield out there and trying to get some income. So if you are looking for income in New Zealand here, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.